Cardinal Health Inc., NYSE, CAH, has posted third quarter of FY17 results after the company said that it expected the full-year adjusted earnings at the lower end of its forecast, underscoring the U.S. drug distribution industry's struggles with falling generic drug prices. Hence, the stock lost over 0.6% this morning, as of 12:56 p.m. Eastern Daylight Saving Time on May 1, 2017. Source: Google Finance. CAH has reaffirmed the FY17 outlook, and expects the non-GAAP earnings per share from continuing operations to be at the bottom of its previous guidance range of $5.35 to $5.50. Moreover, many of the company's lines of business have continued to perform well, particularly NaviHealth, the medical, surgical consumables lines, and the Specialty Solutions Group. The third quarter revenue for the pharmaceutical segment grew 3% to $28.4 billion due to the performance from the specialty business and growth from pharmaceutical distribution customers. The segment profit for the quarter has decreased 7% to $611 million due to the generic pharmaceutical pricing, the final quarterly impact of the loss of Safeway, and the company's ongoing investment in its pharmaceutical IT platform. These were partially offset by a solid performance from Red Oak Sourcing. Further, the third quarter revenue for the medical segment grew 9% to $3.4 billion and the profit increased 16% to $148 million. Cardinal Health in the third quarter of FY17 has reported the adjusted earnings per share of $1.53, beating the analysts' estimates for the adjusted earnings per share of $1.46. The diluted earnings per share for the third quarter has benefited from a lower effective tax rate and fewer weighted average shares outstanding than the same quarter in the prior fiscal year. The company had reported the adjusted revenue growth of 3.8% to $31.82 billion in the third quarter of FY17, missing the analysts' estimates for revenue of $32.45 billion. The revenue grew due to the strength in its pharmaceutical business even as the drug distributor faces declining generic drug prices. Additionally, Cardinal Health in the third quarter of FY17 has announced the intent to acquire Medtronic's patient care, deep vein thrombosis and nutritional insufficiency businesses for $6.1 billion, enabling Cardinal Health to add an industry-leading portfolio of products, deepen its presence in the post-acute channel and increase its geographic scale. CAH in the 3Q 2017 has acquired rights to Navidea's LymphoSeq, which is a radiopharmaceutical diagnostic imaging agent. These product LINES are natural extensions of the work that the company is doing across the continuum of care from acute care, to surgery centers, to long-term care, into the retail setting and even to the consumer. Cardinal Health stock has fallen 7.48% in the last 1 year. Source: Google Finance.